Hi everyone, this is Victor here. In this video, I'm going to analyze Apple stock to see if it's still a great company for long-term investing. At the time of making this video, Apple stock is near 3 trillion in market cap. It is the largest company in the world by market cap. Apple stock performed exceptionally well in the past 5 years. It outperformed the S&P 500 index by a large margin in the past 5 years because of Apple's great products and services, increasing earnings, dividend payouts, and large share buybacks. I actually made a stock analysis video about Apple about 1 year ago. Since then, Apple stock has increased 62% while the S&P 500 increased 45% during this period. Obviously, past performance does not guarantee future results, so in this video, I will analyze Apple stock to see if it's still a great company for long-term investing. I will talk about these topics in this video. First, Apple's business overview. Second, Apple's 3 major long-term growth catalysts. Third, Apple's 3 biggest risks you must know. Fourth, Apple stock valuation. You will learn about Apple's fair interest value per share. And fifth, will I buy Apple stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look, let's start. Before investing in any stocks, I believe it's important to understand the business first. So how does Apple earn its revenues? Apple's business is very easy to understand if you already use Apple products. Apple's most important products are iPhone, Mac, iPad, Apple Watch, AirPods, iOS App Store, and iCloud. This is from the most recent financial report that ended on September 25, 2021. If you look at this net sales by category, you can see most of Apple's sales came from iPhone and services. Apple also earns large revenues from Mac, iPad, wearables, and accessories. As of now, there are over 1 billion active iPhone users in the world. In comparison, according to this website, there are approximately 6.64 billion smartphone users in the world in 2022. If you look at this here in fiscal 2021, you can see Apple had the largest sales in North America, Europe, and Greater China. These are the 3 most important markets for Apple. Apple is the most profitable company in the world. The company earns a large amount of revenue, operating income, and free cash flow every quarter. This is from Morningstar. You can see Apple had very consistent revenue growth, operating income growth, operating cash flow growth, and free cash flow growth in the past 3 years. During the pandemic in 2020, Apple was able to grow its revenue and operating income even though Apple had to close most stores temporarily. In my opinion, this shows Apple has a very resilient business model that can protect itself from most pandemics and recessions. In terms of financials, Apple had 190.5 billion of cash and marketable securities in the most recent quarter ended on September 25, 2021. According to management, Apple had 125 billion of total debt in the most recent quarter. Apple's 190.5 billion of cash and marketable securities was more than enough to pay off Apple's total debt. Here's an important point you want to know. One of Apple's long-term goals is to reach net cash neutral over time. This means Apple will aim to have an equal amount of cash and debt, so they will balance out to 0. Apple is planning to have its cash position be about the same as its total debt over time. If Apple has more cash than its total debt, Apple will return the extra cash to shareholders through dividends and share buybacks every quarter. This is from the most recent earnings call. Let me now turn to our cash position. We ended the quarter with 191 billion in cash plus marketable securities. We issued 6.5 billion of new term debt, retired 1.3 billion of term debt, and it decreased commercial paper by 2 billion, leaving us with total debt of 125 billion. As a result, net cash was 66 billion at the end of the quarter as we continue to make progress toward our goal of net cash neutral over time. As our business continues to generate very strong cash flow, we were also able to return 24 billion to shareholders during the September quarter. This included 3.6 billion in dividends and equivalents and 20 billion through open market repurchase of 137 million Apple shares. When it comes to investing, it's important to be forward-looking. So let's talk about Apple's long-term growth catalysts. First, before we talk about Apple's risk and stock valuation, I believe Apple's most important long-term growth catalyst will still be its existing product categories. Apple is a product-driven company. Apple's most important products are iPhone, Mac, iPad, Apple Watch, AirPods, and the App Store. These products drive the most sales for Apple every quarter. Here's the important part. Apple does not need to release revolutionary products every year or every 2 to 3 years like before. Apple's main strategy now is to release incremental upgrades across all its main product categories every year. Apple tends to release new product designs and major upgrades for all its main products every 3 to 4 years. If you're an iPhone user, you will notice that Apple tends to keep its iPhone design the same for around 3 years. Apple improves iPhone's internal specs incrementally every year and releases a new iPhone design every 3 to 4 years. For example, the iPhone 13 Pro Max design is almost the same as last year's iPhone 12 Pro's design. The only major differences are the internal specs, such as its A15 Bionic chip, the iPhone promotion screen, and much more improved cameras. According to rumors, the upcoming iPhone 14 Pro will feature almost the same design as the iPhone 13 Pro. The iPhone 14 Pro will likely have a hole punch display design to replace the current camera notch. Of course, the iPhone 14 Pro's internal specs will be better than the iPhone 13 Pro's internal specs. Apple's current incremental upgrade strategy still works very well for Apple because most consumers still upgrade their iPhones, their iPads, Macs, Apple Watch, and AirPods every 3 to 4 years. Apple did not release any revolutionary products in 2021. It still had record revenues and record sales across all product categories in the most recent Q4 2021 quarter, despite Apple experienced larger than expected supply constraints. I believe Apple's biggest competitive advantage is its iOS ecosystem. Based on my experience, I noticed that it's very hard for most people to leave Apple's ecosystem once they start using many Apple products. For example, if you use iPhone, iPad, iMessage, and iOS apps every day, it will be very hard for you to switch to an Android phone or an Android tablet. If you have many friends and family members who use iPhone and iMessage, you will likely want to use an iPhone instead of an Android phone. In my opinion, Apple's iOS ecosystem is Apple's biggest competitive advantage and economic moat because most consumers want to stay within Apple's iOS ecosystem once they are used to using many Apple products such as iPhone, iPad, Mac, AirPods, and Apple Watch. Also, I believe iPhone will continue to be the most important product going forward unless it's replaced by another product category such as the upcoming Apple AR glasses. iPhone generates the most sales for Apple. More importantly, iPhone is a very sticky product that can bring more new users to Apple's iOS ecosystem. Many iPhone users tend to buy other Apple products such as Mac, iPad, and apps once they start using iPhones. Here is another important point. In recent years, Apple has become a subscription-based business. As of now, Apple has over 1 billion active iPhone users. In comparison, there are approximately 6.64 billion smartphone users in 2022. In the most recent earnings call, management said this about Apple's paid subscriber growth. Paid subscriptions continue to show very strong growth. We now have more than 745 million paid subscriptions across the services on our platform, which is up more than 100 million from last year and nearly 5 times the number of paid subscriptions we had less than 5 years ago. Apple's subscription-based services include Apple Arcade, Apple Music, Apple News Plus, and Apple TV Plus. iCloud storage plan is also subscription-based. As of now, Apple services generate the second most revenue for Apple. Apple services include iCloud, Apple Pay, Apple Card, App Store, and subscription-based services I mentioned earlier. The App Store generates the most service revenue for Apple. Going forward, I expect Apple services will continue to be a large revenue driver for Apple because many iPhone and iPad users tend to buy many apps on the App Store and use other services such as iCloud storage plan. I believe Apple's second long-term growth catalyst is Apple's new product categories. As of now, Apple is expected to release its augmented reality AR and virtual reality VR headset in 2022 or later in 2023. We will call these Apple AR glasses. I believe Apple's upcoming AR glasses will eventually become a large revenue driver for Apple, similar to the Apple Watch. In my opinion, AR glasses are the next biggest thing after the iPhone. Apple AR glasses may eventually replace the iPhone or work as an accessory similar to the Apple Watch. If Apple AR glasses succeed, it will become another revenue driver for Apple in addition to iPhone, Mac, iPad, Apple Watch, AirPods, and App Store that generate the most sales for Apple. here's another new product category. Apple is rumored to release its autonomous driving electric vehicle EV, which will have full self-driving capabilities. The car is expected to target consumers. This means Apple will compete directly with Tesla if Apple releases its own EV. According to MacRumors.com, Apple analyst Min-Chi Kuo believes it will be 2025 to 2027 at the earliest before an Apple car is ready for launch. If Apple does release its own EV, I believe it will be very hard for Apple to compete with Tesla because Tesla's EV tech, manufacturing processes, and new networks are already far ahead of other EV makers. I believe Apple's third long-term growth catalyst is its share buybacks every year. One of Apple's long-term goals is to reach net cash neutral, meaning Apple intends to have the same amount of cash as its total debt each year. If Apple has extra cash that's not needed for operations and capex, Apple will return the extra cash to shareholders by paying more dividends and buying back more shares each year. In my opinion, Apple's net cash neutral goal actually benefits long-term shareholders because it decreases Apple's shares outstanding substantially over time. For example, even if Apple's revenue and net income are not growing as fast as before, Apple's earnings per share (EPS) can still grow at a faster rate than its net income growth each year because Apple is continually buying back more shares and therefore reducing the number of shares outstanding. In addition to share buybacks, Apple will likely increase its dividend over time to meet its net cash neutral goal. I believe this is one of the biggest reasons Warren Buffett bought 5% ownership or 36 billion of Apple shares between 2016 and 2018. Warren Buffett's 36 billion investment in Apple is now worth 160 billion at the time of making this video. In terms of risk, I believe Apple's biggest short-term risk is antitrust issues, specifically Apple's App Store. As of now, Apple charges as much as 30% commission fees across all app purchase and in-app digital content purchase for software developers that earn more than 1 million in app sales each year. According to CNBC, Apple will charge 15% commission fees for software developers that earn less than 1 million in app sales each year. But here's the important part. Apple requires all developers to use Apple's in-app payment system instead of using outside payment systems. This means almost all their app developers need to pay Apple as much as 30% commission fees for all their app revenues if they want to publish their apps on the Apple App Store. Apple has kicked Fortnite off the App Store because Epic Games, the maker of Fortnite, tried to use its own payment system instead of using Apple's in-app payment system in order to avoid Apple's 30% commission fee. If US regulators force Apple to allow developers to use other payment systems instead of Apple's in-app payment system, this will impact Apple's App Store revenue. Personally, I believe this chance of happening is low. This is from the Wall Street Journal. Apple on Wednesday won a US appeals court reprieve in rolling out changes to the App Store ordered by a federal judge as part of the big tech company's antitrust battle with Epic Games. The 9th US Circuit Court of Appeals granted the iPhone maker's request to delay implementation of a federal judge order to force Apple to allow developers to communicate with users inside their apps about alternative payment methods outside of the App Store. The order means Apple will be able to delay, perhaps for years, putting in place some of the most significant changes ever to how it operates its lucrative App Store, as the company and Apple seek broader appeals. The second biggest risk is competition. The smartphone market is a duopoly between Apple iOS and Alphabet's Android OS. Android OS has a much larger worldwide market share than iOS because Android OS is free for manufacturers such as Samsung and Xiaomi to use. Also, iPhones tend to be more expensive than most Android phones. In many developing countries such as India, most people use Android phones because Android phones tend to be much cheaper. According to this website, Android OS had a market share of 70%, while iOS had a market share of 29% in December 2021. Apple's upcoming Air glasses will compete with Meta's Quest headset and Meta's upcoming Air glasses. As of now, Meta's Quest headset and ecosystem are far ahead of competitors. At the time of making this video, Meta's Quest headset is the only mobile and standalone VR headset that also has a very large ecosystem. If Apple does release its full self-driving EV, Apple will compete directly with Tesla. Again, I believe it will be very hard for Apple to compete with Tesla in EVs because Tesla's EV tech and manufacturing processes are far ahead of other EV makers. The third biggest risk is the current supply chain issues that are affecting all major tech companies, including Apple. This is from the most recent earnings call. If you look at Q4 for a moment, we had about 6 billion in supply constraints, and it affected the iPhone, the iPad, and the Mac. There were two causes of them for Q4. One was the chip shortage that you have heard a lot about from many different companies through the industry. And the second was COVID-related manufacturing disruptions in Southeast Asia. The second of those, the COVID disruptions, have improved materially across October to where we currently are. And so for this quarter, we think that the primary cause of supply chain related shortage will be the chip shortage. It's affecting, I should say, pretty much most of our products currently. But from a demand point of view, demand is very robust. And so part of this is that demand also is very strong. But we believe that by the time we finish the quarter, that the constraints will be larger than the 6 billion that we experienced in Q4. If the current supply chain issues and chip shortage continue longer than expected, it will reduce Apple's iPhone, Mac, and iPad sales in the upcoming quarters. Personally, I believe it will take the current supply chain issues and chip shortage around the world at least 2 years to return to normal. Let's talk about Apple stock valuation. I always use this intrinsic value calculator to calculate the stock's fair intrinsic value, so I will know whether the stock is overvalued, fairly valued, or undervalued. If you want this intrinsic value calculator, you can download it in my Patreon blog in the video description. These are the key assumptions. First, I define Apple's intrinsic value as its future cash flows discounted to the present day. The discount rate is 8%. This is slightly higher than the 7.6% cost of equity calculated by Finbox.com. You can always use a higher discount rate here if you want to be more conservative. Apple's most recent 12 months of free cash flow is 92.95 billion. Based on the long-term growth catalyst I talked about earlier, I believe Apple's free cash flow will grow at a compound annual growth rate CAGR between 5% and 15% over the next 5 years. To calculate the terminal value at the end of year 5, we're using both the perpetual growth model and the exit multiple model here. Then we take the average of both models to calculate the terminal value. Let's go over these 3 case scenarios: the worst case, the normal case, and the best case scenarios. Under the worst case scenario, we're using a compound annual growth rate CAGR of 5%. If we forecast Apple's free cash flow to the next 5 years and discount the free cash flow to the present day, Apple's intrinsic value should be around 1.97 trillion for the entire company, or $120 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using a compound annual growth rate CAGR of 10%. If we forecast Apple's free cash flow to the next 5 years and discount the free cash flow to the present day, Apple's intrinsic value should be around 2.43 trillion for the entire company, or $149 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using a compound annual growth rate of 15%. If we forecast Apple's free cash flow to the next 5 years and discount the free cash flow to the present day, Apple's intrinsic value should be around 2.99 trillion for the entire company, or $183 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Apple's fair intrinsic value should be around $150 per share. This means Apple's stock is overvalued at the time of making this video. In comparison, Morningstar estimated Apple's fair value to be much lower at around $124 per share. So will I buy Apple stock? Yes, I will continue buying more Apple shares if it becomes undervalued, because I like Apple's products and services, and because I believe Apple has a great iOS ecosystem that can protect itself from most competitors. I already have had Apple stock in my portfolio for many years. It's almost a 10-bagger stock. It's the largest holding in my portfolio now. Based on my estimate, I believe Apple's fair intrinsic value is around $150 per share. I will update Apple's fair intrinsic value every quarter once it releases its upcoming earnings. If you want the latest intrinsic value updates, you can find them in my Patreon blog in the video description. Now, all these estimates are only my opinions and my analysis based on my research. They are not financial advice. As always, make sure you always do your research and do your extra due diligence first before investing in anything. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.